I'm good, just busy, busy Monday, and I'm sure all of you know what that's like.
Exactly.
Always fun.
We could just go ahead and start then, I guess, here. So I just wanted to welcome Andrew. He's in he's become somewhat of a good friend, I guess now, right? And
We can be called that.
yeah, exactly. He's been helping me with a couple clients. It's one of my secret powers, I feel like, always, in pretty much everything I've done, and I've worked on many finance positions, is having a really good accountant. Because there's always a situation where usually there's an accountant that needs to get involved. So Andrew's a great resource. He's super responsive. He's actually in my BNI group. That's how I met him. So he comes highly recommended, and he's actually helping me with my client right now. Just to give an example, I have a client which you're going to have this all happen all the time. They haven't done the taxes in 7 years. So 7 years. So Andrew right now is kind of trying to unravel that and get them ready. So, and then their credit's good, their income is, and they make good money. They just haven't done their taxes. So hopefully, once Andrew is able to take care of everything, then he'll be peer approved, and then we can actually get him closed. So Andrew's helping me with that. So I just wanted to have him on the call. Michelle will send out his contact information to everyone as well. So if you ever need an account you could trust, I highly recommend Andrew, and he can just kind of go over a couple things.
Yeah, perfect. Well, thank you very much, Gabe. Appreciate you guys having me on. So I want to go through a couple things for you all as real estate professionals, and then I want to go over a few things first to kind of go over things about your clients, a little bit of like what I've done in the past, just so you guys have an idea of like, what to kind of listen for that would be a good time to bring me in. So a lot of times during the process, you're going to need a licensed accountant to write a mortgage letter or something like that. If you're working with a local mortgage loan officer, they might have a professional that they utilize, but sometimes they might not be quick enough or something like that. I actually usually ask for the condition on the mortgage to reassure that exactly what I write in the letter is going to be exactly what you need. And so that way you don't connect me with your client, and then it's not something that I can actually help with. So I usually like to make sure that we're going to go over and above to make sure it's exactly what you need in order to get it closed. And if it's not a letter I can write for any reason, I'll let you know, or let you know what I would need to do in order to make it happen. So we also do profit and loss statements. I've worked very close with real estate for a long time, and so I understand when you guys need this for a loan. Usually I try to turn it for you in 1 business day. So we're usually very quick to get you exactly what you need and make sure that you tell me exactly how much they need to make, or the loan officer tells me exactly how much they need to make, so that I don't give you a profit loss statement that doesn't help you. So the other thing that we really do is we do a lot of cost segregation studies. So how that will help you is if you have potential investors, or if you have people who are really they're really thinking about buying an investment property but don't want to put the upfront down payment, and they're kind of trying to figure out how like they can recoup some of the cash quickly. If you kind of introduce cost segregation studies or anything like that, or bring me up, I can kind of help articulate to them how the value works. So does anybody not know what a cost segregation study is?
I don't know what that is.
Yeah, can you go over that? I didn't know you guys.
Yeah, for sure.
You actually do the report.
Yeah,
like
we do cost seg studies, and then we implement it on the tax return. Yep.
That's awesome.
So basically, long story short, if all right, perfect. So let's say your buyer is looking at potential beachfront properties or something like that. So normally, how people get tax deductions for investment properties is normally going to be that they will get a there's going to be an allocation of the purchase price. Let's just say 500 grand for a round number. Let's just say the purchase price is 500 grand. There's going to be an allocation of that purchase price that's technically the land value. Now that depends on whether that lands in Longwood or whether that lands on the beach, whatever. But there's usually a percentage of it that goes there. So let's say that's 100 grand. So normally what would happen is the other $400,000 is just deducted evenly over 27 and a half years, and that's it. Okay. So it's not a huge tax deduction for them each year, and they basically just use that against their against their rental income that comes in. So if we go in and we do a cost segregation study, we actually take the building and we're like, okay, cool. So the walls are the drywall is going to be worth this much. The lighting is going to be worth this much. The doors are going to be worth this much. And then, you know, so on and so forth, all the way to the blinds, to the floor, you know, every possible thing in the house, we break down as much as possible, because every single thing with the IRS has a depreciation life. So like a car is usually 5 to 7 years. But a rental property is 27 and a half. So when we break down the things inside of the house, like the appliances, they're usually 7. The HVAC, the AC unit, is going to be 15. So everything that we can get to 15 or below, basically, right now, we can do what's called 100% depreciation. So we actually accelerate the depreciation. So let's say inside of that same $500,000 house, let's say 100 grand is worth of land, but the 400 grand, we really break up into multiple different things. So what basically happens is then we say, okay, cool, $200,000 is probably what the actual 4 walls, exterior walls, and the foundation is worth. And the other 200 grand, we break into all these different little parts. Well, if I can accelerate and take all of that $200,000 of depreciation this year, now if you have like a high W-2 earning client, or if you have a client who's self-employed and has a bunch of other income, well, that's a $200,000 deduction that they get this year. So if their tax bracket is, let's say, 32 or 37%, now they're going to owe $70,000 less when it comes tax time. Or if they've already paid in all the money and they would just normally not get a refund, now they're going to owe now they're going to get a $70,000 refund. So it makes it a lot easier when you're talking about an investment property and you're like, hey, it's going to be 100 grand down. And they're like, you know, when am I going to get that cash flow back? You know, so it kind of really helps. Now, just to clarify one thing, in order to get this deduction against your taxable income, you either need to be a real estate professional or you need to have it as a short-term rental. If let's say you have a doctor client who is making a ton of money W-2 or even 1099, as long as it's a short-term rental, we can end up doing this tax plan and really getting them that huge $200,000 deduction, which is going to be absolutely crazy for them, and also make it so much more affordable when they're looking at buying the house. It also helps you articulate the value there. So, does that make sense?
Yeah.
Any questions about that?
Awesome. Thank you. Yes.
Yeah. So if you ever have anybody looking for a potential investment property or a potential short-term rental and they're kind of on the edge, it might be a good idea just to kind of be like, hey, I've got an accountant who runs some really cool tax strategies with short-term rentals. Would you like to have a conversation with him?
Andrew, does that only work for short-term rentals? It won't work for like a long-term like a rental?
So here's the thing. If they're a real estate professional, it can be anything. I can cost segregate any property, but the problem is a long-term rental, the loss on it is considered a passive loss. And so unless you're a real estate professional, so basically you can't take a passive loss against active income like W-2 income or self-employed income.
Okay, makes sense.
So I only suggest people to do it when they're either A, real estate professional, or B, it's a short-term rental. So now all I will say is,
but if it's if it's straight commercial, like a building,
commercial's fine.
Like,
commercial's fine. Yeah.
Okay.
Yep. Commercial's always active. Now I mean, don't get me wrong. If they're like, hey, I might want to do this long-term, like I might want to end up doing this as a long-term rental down the road, but right now they want to try it as a short-term rental, that's okay. Then we can still take that loss first year and then they can convert it long-term to a long-term rental if that's what makes the most sense for them. But it just has to be, you can't like get a house in Longwood where like there's a rule against no short-term rentals and stuff like that. So,
and then
you have to make sure whatever the area. Good.
And then is that I forgot my question. Forget it.
Cool. But yeah, so if anybody has any follow-up questions with that, feel free to send me a text. I'm perfectly good with jumping on quick calls.
My question is, so like we have a potential client. He's looking at it. He's kind of on the fence of, either buying something or not at all completely.
Mhm.
Would you say, could you do like some sort of, I guess, would you be okay with talking to him even though he hasn't purchased a property yet? Just like kind of like just a
Oh yeah,
general overview. Okay, perfect, lovely.
for sure. Yeah, anybody on the fence pre-purchase, utilize me to help get them over the edge, because I'll give them a little bit of the input of the tax planning idea ahead of time, and then I'll help them implement it on the backside. So yeah,
Lovely.
because even if they take a little bit of my idea and take it to somebody else, like there's going to be the old accountants that don't want to do anything that they haven't done before, so they just won't do it, or they'll just
Yeah,
tell them it doesn't
I've
work.
actually, I thought, because normally it's a whole nother company, right, that does the cost segregation study.
Yep.
Okay, and what was the fees on that generally? Is it based on the size and what it
It,
is?
it depends on the property value. Yeah, but I mean, normally it's anywhere from like 3K to 10K, depending. But I mean, it's definitely only when it makes sense. So,
Copy.
yep. And then normally what we need is just a few of the items afterward. Like we need a copy of the appraisal, we need a copy of the inspection if they had one, and then any any pictures from the property, so on. We have a full list. Sorry, but yeah, so but I'd rather get on a call with them ahead of time just to make sure that they understand the values and stuff like that, and that way,
Yeah, exactly.
It's a better chance for you guys to get a sale that you wouldn't be able to get otherwise. So,
Perfect. That's great.
all right. So we don't have enough time to get into all of it today, but I just want to kind of say, like, one of the reason that I
You have
started
till
to
like
love.
11:30 realistically, bro. So you're good.
All right, cool, perfect. So one of my frustrations early on in my career was that I would have real estate agents come to me after their first year in business. Their first year in business, they'd make a bunch of money, and then they come to me and they would come to me to get their taxes done, and they'd owe a bunch of money. And so I started a long time ago, and I created a tax tips for realtors that I can basically run at any point. That is just kind of like your little guideline in order to really get things started. So, and what I'll do is after the call, I'll go ahead and email over a copy of just our one pager to Gabe, and so that we can distribute it to everybody. But basically, like, I just have a bunch of things that I think that everybody in real estate should understand. And so that, some of it's a little more basic, so you might have heard of some of it before, but in general, just want to kind of go through a few things just to make sure everybody's good. And at the end, we'll have a few minutes for questions. But if you have any other questions about your specific case, feel free to reach out to me. So, all right. So one thing is always discussing with your broker what name you would need to have for an LLC if you wanted to set up an LLC. And then in my mind, there is no reason you shouldn't set up an LLC. The reason I say that is because just having an LLC, even if right now you're a 1099, even just setting up an LLC doesn't necessarily change how your tax is done on your tax return. But it makes it so that if all of a sudden it's the middle of the year and it's June and you're popping off and you didn't think that you were going to make this kind of money, there's now something I can do to help convert you to an S corporation to really help you save money. But if you've never set up your LLC, then you need to work on getting that done first, just in case you get to that mid-year point and you're making that money. That way we can make the mid-year conversion. I always suggest that you talk to your broker ahead of time, because if you go out there and you create an LLC like Gabe is Awesome LLC, it might be a really cool name, but usually your broker is going to want it in the same exact name as your real estate license, and then just adding LLC at the end. So like mine would be Andrew Michael Green LLC. Once you get your LLC set up, you're really going to want to talk to somebody about the value of being a sole proprietorship versus taxed as an S corp. How you'll know if you're a sole proprietorship right now or an S corp right now is whether you're filing your personal tax return with your business income on it, or whether you're filing two separate tax returns, one for your S corp and one for your sole proprietorship. The problem with being a sole proprietorship is that if anybody's ever been a W-2 employee here, when you looked at your pay stub, you saw Social Security and Medicare coming out of your paychecks. Well, what you didn't see is if you worked for a place like Target, they were also paying Social Security, Medicare, the same exact amount you were. Okay. So right now, if you're a sole proprietorship, meaning you file all your 1099 or your LLC on your personal tax return only, you're basically getting hit with a 15.3% self-employment tax which is the Social Security and Medicare for you as the employee and you as the employer. Now, that does not include your normal taxation. So let's say your normal tax bracket is 22%. You're actually going to be paying 37%, 37.3% total. It's kind of crazy. So creating an S corporation ends up making it so that you don't have to do that anymore, but there are some rules in line. Like you have to run what's called a reasonable compensation payroll, which we can get into on an individual basis. But basically, if you're making 50 grand a year after expenses, then you'd probably want to run a salary for about $20,000 to $25,000, just in order to keep you in compliance. But we help do that to kind of keep it as something that's very easy for you to manage. So, keeping track of your expenses and everything like that. One thing that I suggest that everybody does is create a free Gmail account to just take pictures of and send receipts, because if anybody here has that box of receipts in their closet or just throws them away, the issue with the box of receipts is if you ever get audited, most of those receipts will be faded, and so the IRS will not care. Now, I personally, if I were you, I would set up something like Andrew Real Estate Receipts at gmail.com. It's absolutely free. You can make the password something like the IRS sucks or something like that. And then all you do is just take pictures of those receipts and email them there. You never have to go into the email. It's just only if you ever get audited, then you just give them access and they have everything all in one spot, and you don't have to give them a bunch of faded receipts. So mileage, I always suggest that people have an app kind of like Mile IQ or something like that, only because it holds up really well in an audit. It's about $100 a year. But basically, when you get in the car, it's like, hey, are you traveling for work or for business? Or I'm sorry, for work or for pleasure? And then you select it, and then it tracks everything. So it shows, okay, cool. These miles are going here. These miles are going here. These ones are deductible. These ones are not. Now, if you have an LLC set up, the next time you go and purchase a vehicle, I want you to talk to me first, and we can look at your specific tax situation and see if it makes more sense for you to buy the vehicle and make it a work vehicle, or make it a personal vehicle and take the mileage deduction. So there's also other common deductions, kind of like home office and stuff like that, but just watch out, because you do have to make sure that you're actually taking those correctly, or else, the IRS would end up throwing them out at an audit. Now, obviously, all of your actual real estate expenses are always going to be deductible. MLS, NAR, licensing, brokerage fees, any marketing ads that you do, CRM, any staging of home costs that you take on if you've ever paid to get anything repaired, being at the property, paying for different things to get done for the properties. Obviously, all those are going to be deductible, even if you end up buying some client gifts or anything like that ahead of time. Those are always deductible. I personally, Andrew, your accountant, would tell you that 50% of your phone bill and 50% of your home internet are deductible. That's Andrew, your accountant, but Andrew, your friend, tells you that he takes 100% of both. So do whatever you want. But in general, there's certain things that you're just going to want to make sure you're getting those deductions on a yearly basis. So even if you guys don't use me, but next year you go to get your taxes done and you're like, holy crap, why do I owe 10 grand? Or why do I owe so much money? Just have a call with me before you sign those tax returns. There could be plenty of write-offs and everything that they've missed. I like to think of myself as a play in the gray area kind of guy, but I've been doing this long enough to know where we can go and what we can do in order to stay out of trouble, but make it so that you're not having too many things that are really deductible. Or I'm sorry, too many things that are going to create red flags. So if you do have a health insurance plan, there is the ability, if you have a high deductible health insurance plan, there's an ability to contribute to an HSA, which could be huge because it could lower your taxable income by quite a few $1,000s every year. And that money's still yours, so you can still buy plenty of things with it. It's really, it's something that I do on an annual basis, just to literally just run more cash that is tax-free. So once you get payroll set up, you can do things like, setting up a solo 401k and everything like that. in order to really lower your tax liability. But there's plenty of different tax strategies for each individual people. There are ways that you can do things like the hiring kids. There are ways that you can do a lot of the things that you see on social media other than deducting your dog. Don't listen to that. But there are plenty of ways to find deductible things. It's really just the articulation. For instance, if I were going to be going, let's say I have a trip this year to go to Colorado with my family. Okay, cool. What I might look for is something that I can do in the area that would be considered a tax write-off, that would articulate why I'm going there for business and not for just an event with my family. Now, if you go there and you go to some business development seminar for a day or two, or you buy tickets to a business development seminar, I don't care if you go or not, don't tell me. But, if you are going somewhere anyway, look for things that you can do in the area that would make it so that you can articulate at least your portion of the trip, your flight, your hotel, your this, your that, in order to make those things deductible. Sure, if you spend $100 or something on one of these tickets, of course you're throwing that money away. But at the end of the day, it's making it so that you're actually getting a tax deduction for the whole trip, which is going to save you a lot more than that one ticket's going to cost you. So, and if you go to the event, then that's awesome. So, I mean, realistically, it's kind of a ongoing thing of, usually when I have a client, we kind of develop relationship. I figure out what kind of makes you tick. I figure out the things that you really like to do. And then I kind of look at your current situation and find out ways for money you're already spending to make them tax deductions, not just telling you things to spend money on. If you're lacking deductions, it's not because of it. It's, the answer isn't for you to go out and spend more money. It's okay, cool. Let's look at everything you have going on and figure out how to make it deductible, because realistically, with you all being real estate professionals, hopefully you can make it at some point where we end up taking a lot of the income that you have and you've built up over the years and saved tax money on, and really take some of that tax money that you've already saved to end up making so that you can buy, rental real estate and stuff like that in order to make you get extra tax deductions by doing some of those cost segregation studies, etc., that we kind of talked about earlier. So, I'm gonna stop there. I do have more, but I know it's gonna be 11:30 soon. But basically, for me, if anybody has any questions, I'm not the type of person who's going to nickel and dime you. Just send me text, give me a call. Anything you got, any questions you have, if you want to get on a call and go over your specific tax situation, I've got no problem doing that. And then, hopefully we can just find some good ways to get you guys some extra contracts with some of your clients and make some money all together. So.
Awesome. Thank you, Andrew. Seriously, that was amazing insight there. And hopefully everyone got some value or something. We'll make sure Michelle will send out the email with your contact info to everyone on our team, everyone who wasn't on the call as well. And I've a personal, testimony. Andrew always answers my phone. I don't know how, but he always answers the phone or calls me back. And he's currently helping, one of my clients, and I'm definitely going to send him some more. So like I said, it's always been kind of my superpower is having a really good accountant to help me, because it happens more frequent than you. Do you also, hey, quick question. Do you do certified letters too, by any chance? Like CPA certified letters?
Yes, I do. Yep.
Okay, so that's something that
certified letters is a male thing, but yes, I do. I do signed financial affidavits, and I do signed. I do anytime anybody has a mortgage letter that's needed, I write them all the time. I actually have mortgage people who just keep my information because they'll send me all those all the time.
Yeah, so, no, I get those a lot. So that's pretty common, guys. So if you ever have a client that's doing a 1099 loan, a P&L loan, a bank statement loan, you need it every time. And it happens. It's literally happened to me every time. I think I closed like 4 of them last year, where the client be like, oh, I have an account. And it turns out it's a bookkeeper, or, it's an account, but they're not a CPA. So, I mean, it's a big difference. The underwriter will not take that. So definitely we'll make sure to keep you. You should be getting quite a bit of.
They'll only take them from licensed accountants, whether they're a CPA or an EA. They'll take those, but anything else, no. And my only rule is I won't sign a P&L that somebody else did. Sorry.
Yeah.
But like I said earlier, we try to turn those in one business day. So, you know, we understand that it's very urgent when those things are needed. So we're not sitting here just, you know, taking our time on those. So
perfect. Awesome. Well, thank you so much
Awesome.
again. I really appreciate your time. And yeah, we'll send your
Of course.
contact info out. And then did anyone else have any questions for Andrew?
I don't, but thank you for your time. It was very insightful.
Yes, thank
Of
you,
course,
sir.
anytime.
Appreciate you guys.
Anytime. Y'all have a wonderful day. Appreciate you.
Thank you guys for joining the call. Have a good afternoon.
Thank you.
You too.
Hello, boss.
What's up, bro?
What's good? Oh,
You missed the
what's
call.
good? Oh,
I'll see you in a little bit.
power.